All right, the market is so choppy. I have taken I don't know how many trades, and after commissions, I'm only up $100. $70 in commissions, almost almost three-quarters of my fees in commissions. So I'm thinking, all right, I'm going to switch gears here and look at a technique where I'm just going to lose what I'm thinking is just $100. Sorry, $500. Let's say I'm going to put $500 on the limit here. Now I switched to my simulator because I want to experiment with this. Okay, so I'm using this calculator here to figure out, okay, where's my stop loss going to be, where's my entry, and all that good stuff. And I'm noticing this area down here. Let's see, on the 5,000 tick chart, what do we got here? We got an area where there's been some choppy blocks going on right here, and right here and right here, and it looks like price could come down to that level there. And I'm thinking, you know what? I'll put my stop right here underneath that pivot. And I got to calculate, I'm in 1 micro. How much is that going to cost me? And if it's not 500 yet, I'm willing to add down to these pivots and give myself an out stop loss down here and try to calculate that, hey, my 500, I want to be out of this trade if it keeps going down past these pivots, and I don't want to lose more than 500. Okay, so starting with 1 micro here and just let it jump around. If I can get an easy $50, $70 out of this several times over, I'll take it. So if I get $50, I'll take it. If I get, it comes back down. It's been really, really choppy, unpredictably choppy, and I'll take it. So you might say, well, why would you risk 500 just to make 50? Well, the goal is to make 50 several times over before it would come down and stop me out. I'm willing to take the $500 loss on this concept. It's a concept, it's an idea, it's a theory, and it will cost me $500. And part of that theory, part of that plan, part of that trading strategy is to take small profits and let it chop around if necessary. So right here, up here on the simulator, you can see right here, I'm down about $35, $45. Like I said, I've calculated, well, that's with 5 contracts. So I'm not in 5 contracts. I'm only in 1, as you can see right here. So I'm not even sure if it will be able to go down this far. And if I add, I would want to add down here. I don't want to add too soon. If you add too soon, then the $500 maximum risk, as you can see right here with 5 contracts, we're already at $612 just at this stop loss level pivot right here. If I want to do a strategy where I'm adding and I'm using these levels down here as my stop loss, then I cannot add too soon to this 1 micro. Just let it jump around, let it come around. When it gets lower, then I can calculate, okay, when can I add 2 micros? It would be my idea is probably like if it comes down here, add 2 micros, be long 3, and then if it keeps going, I'm sure it'll hit my 500 limit and I'm out. Okay, so that's kind of the plan. Like I said, if it goes up, I'll take whatever profits it gives me and reassess another setup opportunity. But it looks favorable in terms of potentially going up. As you can see on the 10,000 tick chart right here, it's kind of free. Right in here, it was chopping around. It was stuck underneath the trend line, underneath the moving averages. The moving averages hadn't crossed up yet, but above the 200. So when it finally got free over here, I did take a quick scalp to the upside. When it finally got free over here, I'm thinking, okay, it's possible that it's just going to do in a range. And I'll go ahead and start with 1 micro at the top. And I'll try to play the bottom down here as my stop loss area, this square down here, and see if I can do that properly. All right. So I will continue to record the moves, the adjustments, and the final results, and we'll see what happens here. All right, quick update. So far, so comfortable trading like this. We're only down, let's see, 117. It was down about 150. And like I said, the target, the ultimate is 500. We're pretty close to these pivots. So if it gets down there to the pivots, I'll be looking to bounce off this trend line and the pivot levels. And if I'm right, I'm right. it'll be a great trade. We'll have a couple of extra micros and we'll ride it up higher. And that is the plan right now. All right, let's get back to waiting patiently. Okay, let's examine this a little closer here. I had the right idea, and it's still valid. I haven't busted yet, but I want to take a look at what I was looking at here. I was looking at this area here to be support. You see these pintails over here, and you can tell that when it got down into that area on the top of that box, right? It went up about, that's 45 points. That's like, that's like $90 for one micro for the in MNQ. $90? Okay, but I just jumped in early and I got in too high. And so the bounce, I was up here, I got in up here, and so I didn't get to take advantage of that. And even down here on these pivots here, that's a decent 35, 45 point bounce just in that little area right there. So timing and precise entry is very, very important. Okay, I guess because I was practicing something on a simulator that I just sort of jumped in, didn't wait patiently, and that's the danger of simulator. It does take away some of the edge that's necessary for real money psychology. Real money psychology keeps you sharper. It does. And let's take a look at that over here on the 2000 tick, because what we just looked at was the 5000. Let's get closer in on it. Okay, so you can see right here, these pintails right over here in this area. Look how high it bounced. And this was the area that I was thinking, this little block here, where it could bounce off of, and it did. And you can see where I got in right in the middle here, right in the middle. If I would have waited with more precision, I could have got in at a lower price, and that would have really done well. Okay, the next area of blocks was kind of like right in this area here. And let's see, did it do anything? Yeah, right there would have been a great entry, right? And it bounced all the way up here. So, okay, I'm getting some ideas that are half decent, but the executions are not precise. So I'm noticing that. I'm gonna stay in the trade and see what happens, because like I said, if it comes down into this box area and I still have plenty of room before I hit my $500 maximum stop loss, I'm going to look for trade setups. I'm going to look some trend line break, some candle pattern, and I'm going to get back. I'm going to get in it and I'll try to see if it works out for me. Let's see what happens. Okay, what I did was, as soon as it went up and I got 25 bucks off of it, I closed it. You might say, why did you risk 150? I was down 150 here just to make 25. Well, actually, I was risking 500 on this particular concept and trade. That's my maximum loss for this trade. And built into the theory was small profits, because I don't think it's going to go up. When we take a trade, we have a hypothesis and a bias, and I just don't see this. We have spent more time, if you look at the 10,000 tick chart, from where I entered in, which is about right here. Let's take a look at this. I entered in about right here, and we spent more time underneath that than we have above it. So I'm betting that I'm going to get a better price, right? So I went ahead and just, because I jumped in it and I didn't have accuracy in my entries, I said, let me try to get some accuracy on my entries. Let it come back down. It's been spending more time down here in the bottom. It's been spending more time in this area down here than it has up here. I'm sorry, in the middle range here. Let me see if I can get that better again. Yeah, you know what I'm saying. It's been spending more time below this line than above this line. I can't draw right now, but anyway, the point is I'm going to wait for it to come back down into the area that it's been spending more time in and see if I can get a better price. So let's see how that goes. Okay, let's see if I can get this. It's been spending more time below my price. My price is right here in this box. That's where I got in. And as you can see, it's been spending more time down here in this area down here than it has above that, right? So I may be wrong, but I have a feeling it's going to rotate down here where I can get a better price. So that's my theory. And if it keeps going up and I missed more profits, this is the law of trading, is that you're going to be wrong eventually. And so I'm fine with that as well. I've got to learn from this. We're planning something. I am using a simulator for practicing new ideas. I don't like using a simulator for any other purpose. Demos and simulators are actually bad for your real money psychology. And subconsciously, you know you're not using real money. Even if you think you trade the exact same, there is some loss of edge when you use a demo. So I'm using a demo just to practice a new concept or a new idea that I will use a demo for. And so I'll let you know if I get back in it and what happens here. Okay, using the same logic, I'm going to short. If it spends less time above that entry level, then if it's going to remain a choppy day, if my stop loss limit is 500, if I'm going to add to my position in a way that builds my position without hitting my maximum stop, then I can just reverse this idea and come up here and add in this area up here. Okay, so if it continues to go up, I'm only short 1 micro at this pivot level here. If it keeps going up, I will try to short up there. And you know, if it hits my maximum stop, that's fine. If I can make small profits as it falls back down, I will do that. And then I think that I'll try to short it as well. We're already up, 20 bucks here. Let's see what happens. Okay, I'll take another $45. So as we're practicing this, we're making, over and over high probability, smaller profit targets, and it came down here and we're out of that trade. So I'll do the same thing, as it continues to come down lower than my previous buy level, and play both sides. I like that. I'll play both. Okay, I have a choice to make. Do I follow my technical analysis on the bull side, or do I play my gut intuition on this Friday choppiness that I can short up here at the highest levels? So there's a conflict, and at the moment I'm choosing to short. Same idea, $500 maximum loss limit, but you can see how high we are up into. Overnight, what happened was price went over the previous day's levels and just came right back down, as you can see right here. Just previous day's high is this line going across, previous day's high coming back down. And so we're at that level again. We're getting up there. I wouldn't be surprised if it does probably come up and hit the top, right? But I'm going to start my 1 micro right here and see what happens and see if it'll give me any kind of profit here. And I'll let you know. Okay, yeah, like I said, using a demo takes away the edge of real money trading. And I went to the bathroom thinking, in the back of my mind, I'm thinking that's not real money. I probably could have had $70, $80 on this short, and I only got 35 because when I got back, I wanted to take that profit before it came back up. So yeah, I took profit here, shorted up here, and I could have gotten about 80 bucks, 75, 80 bucks down there. So let's keep the concept going. And if it stays up here, I may just want to hold off on shorting. But I'm still in the short mode, but it's going to have to come up a little bit higher. Otherwise, I'll just wait for it to come down lower than this yellow line, which is where my original long entry was. Anything above this, I will short. Anything below this, I will try to go long, but it needed to go back up over the top of my original short price because that's what I'm waiting for. Okay, let's see what happens. Okay, so here we are again. I'm back to where I was. I bought it when it came down reasonably well and sold it when it popped back up right here. Let's see, I bought right here and sold right here just for some scalps. And we stayed well within our maximum loss range. Now, the difference between this and dollar cost averaging is I already have, before I entered the trade, exactly how much I'm willing to lose on the trade and no more than that. When I was dollar cost averaging, my daily loss limit was to just simply blow the account. The Apex 50K challenge account, $2,500 drawdown, and I blew a bunch of accounts with that kind of trading strategy rather than taking a $500 loss and living to see another day. So I'm over the DCA trading, and I am going with this strategy and just having a stop loss in. But today's market was so weird that my stop losses were getting hit over and over, and I was basically breaking even. So I said, let me give some room to play here. Let me have a set stop loss and see what happens. So I like this strategy. I wouldn't do this every day necessarily, because there's going to be times when the market is fluid and flowing, and you can have a trend line break and a retest, and it works great. And that's when you go with that strategy. But a market that's chopping around so much, I'd rather do this. So we'll see you in the next video. Hope you're doing well out there.